Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
So my warning that I gave actually was be careful into the election. It isn't like right now we're still running long and strong in gold and silver. Miners got hit because of Newmont, right? That 16% plunge pulled down GDX, but silver is still fine. The worry that I have is twofold. Right now, you've probably noticed dollar is moving high with yields. Now, dollar is moving against FX so that gold is still moving higher with dollar because gold in yen, gold in yuan, gold in euro is reaching all-time highs. It's a little bit more structural and mechanical from a macro standpoint why dollar is still moving higher with gold and silver. It's because it's really creating this strength relative to other currency pairs in gold. So it's still a macro trade. My warning was twofold, that it has reached that 78.6 fib retracement in SLV, which was literally that 31, 57, 58 area. So then we softened a little bit. And the second thing, same thing with gold, GLD 250. That was the 2618 fib level. So that's a really big thing. Now remember though, they're both still running. They're extended, and that is like I just kind of, I hopefully explained as it relates to the dollar yen is still moving higher with the dollar yuan, and that's creating this strength in gold relative to FX. But the worries that I had were that it was getting extended, number one, and number two, if there is a Trump win, and it wouldn't even likely be announced on the same day, like in 2016, we knew by midnight on voting day. But this time, no way. It's going to be days. But we could absolutely have some shake and bake. If Trump wins, I believe that the gold and silver trades will come down potentially sharply. So that would be another buying opportunity. But my concern is that because it's such a strong move in precious metals, what would interrupt? That's basically it. If we get a dollar that pulls back on any other economic data, even before the election, and I shouldn't even say the election because it's the election announcement, it could take days. Unfortunately, it's going to be contested, right? So we have composition of bills coming in tomorrow morning by Yellen. That's actually market moving. We've got jobless claims. That's market moving. And we have Thursday morning and we have non-farm payroll. That's also market moving. I'm not going to be surprised one bit if the dollar and yields start coming back in with gold and silver. Don't believe that this job data is going to be trend-worthy data. It's hurricane, it's weather, it's temporary. But you know what will happen to algos, right? So they'll start pricing in maybe some economic weakness from the jobless claims or non-farm payroll. This is the risk. So I'm just kind of outlaying the risks that we could have that dollar soften. What if QRA, I have no idea how she's going to split up the composition of all this treasury issuance, but I do believe that yields have run into the hot sun of that heavy resistance at that 4.33, 4.36 area. It would not surprise me if she tries to support bond bulls here between tomorrow morning and next Thursday FOMC. And if so, we're going to have the yen bounce. We're going to have bonds bounce. We're going to have yields come back in. We're going to have dollar come back in. And I think that would be cause for the gold and silver, because they are right now positively correlated with dollar and yields rising. I think that would cause some shake and bake. And I think it's also peace. I don't mean this meaning, everyone is like, no, that doesn't mean because the Baltic, Iran. No, it means it would start to price in him giving concessions to Putin and Ukraine, ending armistice, something. And that trade is macro short term, very bullish for the euro, But I think we would also have gold and silver come back down. This is my thinking. It may not work, but my thinking is Trump is going to cause the market to price in Russia-Ukraine armistice of some sort, which is going to take the geopolitical risk premium out of gold and silver. That's what I mean. I'm not talking about the correlation with dollar and yields at this point. I'm just talking about the risk premium coming out of gold and silver on a Trump win. So I got three things now. I got economic data, even if it's only temporary in the jobless claims or GDP just came down, for example, from 3.3 to 2.8. That's economic quote unquote weakness. But it's because of weather. It's because of those two huge hurricanes we had of Milton and Helene. Second is the correlation with what's happening right now, dollar and yields moving higher, making gold stronger in FX currencies. What would happen to that? It's getting a little stretched if we come back down with yields and dollar, which could absolutely be market moving tomorrow morning on QRA into the 7th for FOMC. And then last but not least is the Trump trade. If we price in peace, it would be geopolitical risk premium coming out of gold a little bit. You're still long and it's nothing wrong. It still looks great. My gold silver ratios, the technicals, it is extended by $2 from the mean, but there's just so much going on the next 2 weeks exactly. After the election, folks are hedging right now, not just gold and silver, but they're buying VIX calls, right? That's why skew is so high. They're buying puts because they don't know what's going to happen, which means when it all is said and done, that stuff has to be unwound. But that also means that IV will start to crush right after the election. But the next 2 weeks, I would protect. Nothing shows up technically. I got to tell you, nothing shows up with this chart having anything wrong with it in gold or silver. So this is completely a macro warning.
Join Club to trade with Samantha. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.